Hi, welcome back. In today's video, we'll be talking about GameStop. Initially, I was thinking whether to make a video on this topic because I was worried that by the time this video came up, the whole thing will become a past. However, after observing that the price still going up and I think that this phenomenon will start for a while, I think it's worth to spend some time to talk about it. We will be covering the following: the GameStop company, the short sellings and the short squeeze, Wallstreetbets, and my takes on this topic. Alright, let's jump in. GameStop is an American video game, consumer electronic, and gaming merchandise retailer. The company operates 5,509 retail stores throughout the United States, Canada, Australia, New Zealand, and Europe. So GameStop is a video game retailer. Like many other retailers, GameStop are suffering from the shift to online sales. The video games chain is losing money and plans to close 450 stores this year. And surprisingly, GameStop has become one of the hottest stock of the year. This is the chart that I pull out from Macro Trends. As you can see, the revenues has been dropping consistently in the past few years. And in the recent years, the sales has dropped by around 20 to 40% year on year. So by just looking at the fundamental of the company, we know that GameStop is a dying company, and only recently the share price has been revived by a group of Redditors called Wallstreetbets. So Wallstreetbets, or WSB, is a subreddit where participants discuss stock and option trading. So Wallstreetbets is known for its aggressive trading strategies, which primarily revolve around highly speculative leverage option trading. One good example of the Wallstreetbets trading is this Redditor called Deep Value. As you can see here, every day he is posting his GME YOLO updates. Based on the screenshot here, he has basically turned 800,000 to $23 million. Before we talk about the short squeeze, I think it's good to understand what is short selling. As shown in the diagram here, the short sellers will borrow 10 shares of ABC stock and sell that 10 shares on the open market. Once the stock loses value, the short seller will buy the 10 shares of ABC stock for lesser and return back that 10 shares and keep the $100. So this is basically how short seller makes money. And if the share price goes up, the short seller will have to buy back the shares at a higher price and incur a loss. Let's take a look on what is short squeeze. A short squeeze is a rapid increase in the price of a stock due to technical factors instead of fundamentals. A short squeeze can occur when there is a lack of supply and an excess of demand for the stock due to short sellers covering their positions. So in the example earlier, if the short seller sells 10 shares of ABC stock for 500 and the share price keep increasing, the exposure of the short seller will actually increase with the stock price. The maximum potential loss for the short seller is actually unlimited. Imagine that the share price increased from 500 to 5,000 or 50,000. One day, the short seller will still have to buy back the shares to close the position. So if the share price increased substantially, the short seller will have no choice but to buy back the shares to reduce their exposure. And the action of buying back will actually create additional demand on the stock, which push the price even higher. So essentially, this phenomenon is known as short squeeze. So what happened to GameStop? So what actually caused the parabolic surge in GameStop's share price? GameStop had an unprecedented level of short interest, which equated to 139% of total shares held short, meaning that there weren't even enough shares out there for everyone to cover this high-risk position. As more unqualified due diligence, memes, and the screenshot of unbelievable gains hit the WSB message board, more and more degenerates, this is what they call themselves, piled into GME just hoping to catch some of the profit action. This caused another larger cascade of short sellers from larger institutions to cover their short positions, which made the upside move of GME radically larger, catalyzing the big short squeeze. So the narrative painted by the Wallstreetbets is actually quite simple. So the Wallstreetbets are rallying the troops to push the GME price to 1,000 and above. It is their intentions to engineer a short squeeze that will push the short seller to cover their shorts. The story that Wallstreetbets want us to believe is that there are two groups. One belongs to the hedge funds or the short sellers, and another group which are the Wallstreetbets. So in this post, Wallstreetbets is essentially saying that the hedge fund managers continue to look down upon the retail investor. They truly believe that the average retail investor don't know anything about finances or the market, and we are just gambling our money away. So they want the retail investor to keep buying the shares of the GameStop and to keep pushing the price higher and higher, and eventually will cause some losses to the short sellers. So at least this is the simple version that they want us to believe. However, the actual situation is a lot more complicated than that. This is not just a war between the hedge fund short sellers versus the retail Robinhood investors. So on the buy side, we have new investors that keep piling in, pushing the price higher. And at the same time, I believe that there are many institutional investors also buying into GameStop. And then on the sell side, as the share price keep increasing, there will be new short sellers that will join in the battle. And besides that, those who have entered the position way earlier are happily cashing out. This is why I think that the real picture is a lot more complicated. So as a retail investor, what should we do? Okay, I know that I'm probably going to oversimplify this, but the way I look at these situations, it is very similar to a Ponzi scheme. So I will quickly explain how a Ponzi scheme works. Basically, you have a schemer at the top level, and then you have investor placing their money with the schemer, initially receiving the investment returns. So these are the guys that join in early. And subsequently, more people see the operation working and decide to join in. And finally, as the scheme gets even more popular, then it will attract even more people to join in and invest. So as long as there are new investors that keep piling in and buying the stocks, right, the share price will still continue to increase. However, the number of investors that will be interested in this kind of speculative trades are limited. As you can see from the price chart, since early this week, the stock price has essentially go 90 degrees up. So the share price will continue to increase up to a point where there is no more new investor that piling in. We don't know where's the level. It could be close to current price at about 350, or it could go even higher to 400, 500, even 800, right? Imagine that when the stock price peak, meaning that there's no new investor keep piling in, then the last batch of buyers will be the one that's holding the stock at the maximum price. So what happens next is that the share price will start to come down. This is because no one wants to hold on to a stocks that is without fundamentals for long term. Let's take a look at the share price. As of mid last year, the share price was still trading at about $4, and now it has increased by almost 100x to $344. So we all know that the share price went up has nothing to do with fundamentals. It is purely because of supply versus demand. The supply is fixed unless there's secondary offering, and the demands depends on how many new investors are piling in. The million-dollar question is when the stock price will peak, and it will peak at what level? The answer is that the price will peak when there is maximum optimism, meaning that most people just join thinking that they can profit from this. Because everyone bought into the stock know that there's no fundamental to support the share price. Once it becomes saturated, the stock price will stop going up and it will crashing down. There is this old Wall Street saying that the market takes the escalator up and the elevator down. So in the case of GameStop, after the price peak, I would expect that the price drop faster than it goes up. So if you have invested in this stock, I would say it is a good idea to get out before the Ponzi scheme or the bubble pop. If you do not get out in time, then you are the suckers. So invest safe and see you in the next one. Cheers!